In this video, we will look at QORVO. QORVO is a stock that is owned by Seth Klarman. Around 10% of his portfolio is in QORVO. So we will look at some of its numbers, their revenue, their debt level, and in the end we will try to come up with a fair value of QORVO stock using the free cash flow yield metric. So let's get started. First of all, the idea of investing in QORVO came to me when I saw the comment of one of the subscribers. So thank you very much for that comment. So if you have investment ideas, please write in the comments below. Okay, QORVO produces chips. Its chips are used in various areas. For example, for mobile products, its biggest customer is Apple. It's used in 5G networks, Internet of Things, so smart devices. Even in defense products, the chips are also used in vehicles, electric vehicles. So as you can see, there is a lot of growth in these segments. So several segments are growing more than 15% per year. So in the long term, investing in QORVO allows us to capture the growth in fast-growing segments. There are not many competitors in the industry. So there are high entry barriers, so this is the source of their moat. The stock was down because of the overall market sentiment. There was also a chip shortage. For example, Apple is the biggest customer, and the chips are sold to Apple first. As a result, there is no shortage of iPhones, but there is a shortage when you try to buy the new PS5 or Xbox. Also, one of the reasons why the stock was down significantly in the recent quarters is the low sales in China, but management is expecting that the situation will reverse in the next quarters. Okay, when researching a stock, what I really like to see is that super investors, gurus, are buying or holding the same stock that I'm researching. And Seth Klarman, a famous super investor that I follow, has around 10% of his portfolio in QORVO. He initially bought the stock in 2017, and he added his position in the recent quarters. So the average price that he paid for the stock was around $60 per share, but that was around 5 years ago. So right now the revenue is significantly higher. He also added in the recent quarters, which may be an indication that he believes that the stock is undervalued. So overall, that's a very positive sign. Next, let's look at some of the numbers. First of all, in the recent quarter, their revenue was around $1 billion. So this is in line with what analysts were projecting. If I look at their main segments, their mobile products brought around $700 million, while infrastructure and defense products brought around $300 million. If I look at the revenue by country, we can see that the most sales were in the United States, while the biggest decline was in China. So again, this is one of the main reasons why the stock was down significantly in the previous quarters. If I look at the revenue for the last years, we can see a steady trend up. Seth Klarman bought around 2017 when the revenue was close to $3 billion. Right now the revenue is much higher. We also can see that they're buying back the shares. As Warren Buffett famously said, if they keep doing that, I'll be the last shareholder. If I look at their debt level, we can see that they have $850 million in cash and cash equivalents and close to $2 billion in debt. This brings their net debt of close to $1.2 billion. If we compare that to their free cash flow, debt not seems to be an issue. So they are not paying a dividend. They have high return on invested capital of close to 13%. This is the indication that they definitely have a moat. If I look at their operating free cash flow per share, we also can see a steady trend up. This brings us to their valuation. We do not want to overpay for the stock. We will use free cash flow yield as a valuation metric. This is something I learned from Terry Smith. So this is their chart or free cash flow yield. We are using next 12-month free cash flow divided by market cap. So the average was close to 7.5, while right now it is close to 11.4. So from the current price of $86 per share at the moment of writing the video, it offers around 50% upside. So the fair value of the stock, according to this method, is close to $130 per share. So the stock offers around 50% upside, and the fair value of the stock is close to $130 per share. Okay, in this video, we looked at QORVO. So I like the fact that QORVO is owned by Seth Klarman. Around 10% of his portfolio is in QORVO, so a very high conviction bet. I like the fact that investing in QORVO allows us to capture the growth in high growing segments. They have manageable debt, rising free cash flow, and if we use free cash flow yield as a valuation metric, the stock offers around 50% upside. Also, if you want to know more about other purchases of Seth Klarman, here is the video. If you are not subscribed to the channel, you can do this by pressing the button right here. You will not miss a single new video. Thank you very much for watching till the end, and see you in the next video.